Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, April 8, 2015. Inside the numbers tonight, we'll of course talk about the SPY and the E-Mini contract, and I'm going to do it with numbers tonight. I'm going to give you good, solid target numbers, both on the upside and the downside. We're going to talk about crude oil. I'm also going to give you an important number in crude oil. Gold, once again, I'm going to give you an important number in gold. Interest rates in the bond market, we'll talk about that, and we'll see where we are based on the cycle bottom that we had this week. So, okay, let's get into it. Let's go over to the SPY, and you'll notice that we're still in the middle of the range, right? We know our line in the sand is 204, and we know that if we break higher, we're going to challenge the double top up in these areas. First this one, and then this one. But most importantly, we have to get through this area right here, okay? We have to get through this high in this day and close above it before any of that could happen. If we don't do that, we go back down to 204, and if we go back down to 204, I have a sneaking suspicion that it won't hold the next time around. So where does that leave us? Well, let's go down to the micro level and let's look at what happened intraday, and then I'll get to what I think is going to happen next. Look at this 10-minute chart, okay? See this area here? This is around the Fed minutes today. Now, the Fed didn't say anything. I don't know what they said. I have no idea. I didn't read the minutes. I didn't read about the minutes. I didn't listen to the minutes. I don't give a hoot about the minutes. The bottom line is we care about what the market thinks is going to happen or how the market reacts to whatever nonsense the Federal Reserve is putting out. And normally we see a both direction reaction whenever the Fed comes out with anything. Usually the market will go up and then it'll go down, or it'll go down and then it'll go up. And in this case, it went down and then it went up. And this is quite the ripper here. And what this is telling you, this green candle here after the down candle, after the Fed announcement, this was at 2 o'clock, okay, 2:10 and then 2:20. It's amazing. So what this is telling you is that there's a bid underneath this market. There's buoyancy under the market, if I can use that term. And the market really wants to go higher, okay? So now let's go back to the daily and let's figure out what's going to happen. So here we're coming to Thursday tomorrow. My inclination is we probably have, and if you notice, all throughout, almost every day, but certainly this week, the market is trying to fake everybody out. If you're watching the intraday movements in the market, it seems to be trying, like it normally does, to fake everybody out and look like it's going to do one thing right before it does the real thing. Well, I don't think tomorrow should be any exception to the rule. I'm suspect that we're going to go down in the morning. Not too much, but maybe we'll find support on the, I have numbers for the E-Mini contract. So let me just switch over to that for a second. So this is the close above we were talking about if you relate it to the E-Mini. Okay, we have to close above this level, which is 2080, 2089.25. Okay, so basically we have to close above this level. This is the line in the sand, okay? The line in the sand is down here at these lows, coinciding with the 204 on the SPY. So the level we were just talking about on the E-Mini contract, if we went down in the morning, would be about 2065, 2066. I'm suspect that the market will drop in the morning, and I would not be surprised to see the market defended at 2065, 2066. Then what? Well, we're coming into a time frame between tomorrow and Monday, okay? Tomorrow and Monday, where the S&P E-Mini futures contract should find itself at 2095, okay? Whether it's Friday, Monday, or even tomorrow, the S&P E-Mini should find itself at 2095. What happens at 2095? Well, I don't know exactly. One of two things for sure is going to happen. Either the market's going to consolidate for a while at 2095, maybe for a couple of days, and move higher, or we're going to fail at 2095 and we're going to find ourselves headed back downward. And it remains to be seen what happens, because it all depends on how we get there, with what momentum, what volume, and all those indicators that I use on a daily basis. So that's what I see in the market for the next 2 to 3 days. If we fail, back down, and if we don't hold 204 in the SPY, there could be trouble. Then there could be another 9 or 10 points on the downside, or 90 to 100 handles on the S&P on the downside, if we don't hold 204. Okay, just to make mention, one of our favorite indicators, the Russell 2000 index, the IWM small cap index, was very strong today. It was a lot stronger than the S&P, a lot stronger than the Dow, and a lot stronger, well, equal to the NASDAQ, a lot stronger than the Dow and the S&P. What does that tell you? Like we always say, when money flows into the NASDAQ and the Russell, it's money flowing into riskier assets, which is bullish for the market. Okay, now I know over the last couple of days before this, we saw the opposite effect. We saw the mirror image. The IWM was somewhat weaker than the Dow and the S&P, and that was leading me through caution. Now, one other thing I noticed today, and if you remember yesterday, we talked about the transports. And if I bring up the transportation average, yesterday the only reason the transports were up because of FedEx. Today the transportation average was up, and it was up almost about the same as the IWM and the NASDAQ. So basically it's like a directionless market. All my indicators are flip-flopping day in and day out. Not all of them, but those that I've just discussed are. So it's hard to get a read off of those, but we have other tools in the box, other tricks up the sleeve. Don't worry about it. Okay, so let's go over, that's pretty much it on the market. I think you got the picture. 2095 on the upside. As long as we hold above 204, we're good. Gold. Gold's in trouble a little bit. I don't like the action in gold all of a sudden. I don't like the fact that we dipped below 1200. So I did some calculations, and I have some notes here. Just bear with me. I have to find them in the notes. Okay, 1198. We have to close each and every day above 1198 for gold to remain in the bullish position. A close below 1198, and I'm going to start to get concerned. We should see a rally ensue in gold, but I don't see it happening. I really expected something to happen this afternoon, specifically following the Fed minutes. Not that they're tied with gold. I saw that as an opportunity for gold to get off the mat, and it didn't do it. So I'm watching it closely. I'm a little concerned. I'm long gold. Full disclosure, I have a trailing stop in, and it's going to be a winning trade one way or the other. It's just a matter of how much. So if I don't like the action in gold, I'm going to tighten up my stop, let the market take me out if it's going to remain weak, and that's the end of it, and that's fine with me. I'm okay with that. Let's go over to... well, the same goes, by the way. We'll go over to GDX. Same goes for GDX. There's nothing really to speak of up until I think we dip below 18, probably 18 and a half, maybe the number, and that's this the low or around the low from this day here. So I think you have to stay above this low from this day here, which the exact number is. I can never get it. And then this window pops up. I hate when that happens. The low is 1846. So we really have to stay on a daily close above 1846 in order for this market to pique my interest. Any close below that area, and I have to believe that we're going to go down a double bottom, and that would coincide with weakness in gold. So I'm watching both. Keep going after it each and every night. Try and give you the best information I've got. Okay, so let's go over to crude oil. So here's the deal in crude oil. We saw a wallop of a down day in crude oil, and it started overnight, and it just got hit real hard. Okay, so we couldn't even get to the top of this channel. Now you're headed towards the bottom. My number and the line in the sand, so I've given you numbers in the S&P, I gave you numbers in gold, and I'm going to give you another number in oil. All right, $51 on a daily close. All right, if today we closed, which we didn't, but if today we closed above 51, okay, it was going to be bullish, back up probably to 53, 54. but it didn't happen, so I'm suspect. And until I see now, starting tomorrow, I got to see hourly closes above 51 to get me interested. And if we start to see the market, catch a bid and hourly closes above 51, and if we close above 51 tomorrow, I think we'll still see 54. But hourly closes should be the first indication that 54 is in the cards. But it's just a trade, and it could happen all in the same day, just like it did the day before today. Overnight from yesterday into today, it just was for 54 down to 50 and change. Okay, so that's what I see. So 51 is your line in the sand. Below 51 is bearish, above 51 is bullish. Hourly closes beginning tomorrow, and then daily closes. What else we have? Did crude, did gold, bonds. So right here, we had a daily bottom yesterday in the bond market. So we should see some upside, but I don't know how much there is. Full disclosure, I'm long again this market. And I'm long from yesterday, and I thought we were going to see higher prices, and I still think we will. Just how high? 132 to 133, I think, is reasonable. So that's basically up to this double top area here from these two candles here. So not that much upside, but nevertheless, from the low of yesterday, it's not too bad. And anytime you can make a couple of quick percentage points in the bond market, it's a nice deal, especially when it happens in 2 or 3 days. So that's what we're looking for. We're looking for some more upside. It's just a small daily cycle bottom that probably will play out through the remainder of this week, maybe into next week at the latest. Okay, the dollar. The dollar was another strong horse day today. Let's take a look at the 60-minute of the hourly chart. We're not in that buy zone. I want to be in the buy zone, and I'm patient. I'm doing the best I can to be patient. So we went from 96.60 up to 98 and a quarter. That's quite the move from yesterday to today. So there's, again, just like the S&P, there's buoyancy underneath this market. This is a bullish market. So not to say we won't come back into the zone. I think we will. But the point is that this is what a bullish market looks like. It looks like every time it dips down, it catches a bid and it goes up strong. So make no mistake about it. This market's going well above 100, most likely this year, if not into early next year. But the move is going to begin this year for sure. Will we get into this zone first? I think so. So I'm holding out until the market proves me otherwise. And where am I wrong on that? Basically, a close above this high here, and I'm probably wrong. A close above this candle here or this candle here, and I'm most likely wrong. So, even though I may not catch the entire move up to whatever it goes to, 104, 106, 108, but I would rather have a trade on with higher probability of success with less profit potential than more risk with bigger profit potential. Okay, you see where I'm going with that? The capital is all we have. Okay, so I like base hits and doubles, base hits and doubles, base hits and doubles all day long. Okay, once in a while, maybe 1, 2, on the outside of 3 times a year, we'll hit a home run. Okay, and it may be an oil trade, it may be a gold trade, it may be an S&P trade, it may be a short trade, it may be a long trade. Whatever it is, it doesn't matter. Okay, we hit home runs 2, maybe 3 times a year. But the base hits and doubles, boy, do they accumulate. Okay, and if you follow our trade alerts, usually our timing is pretty darn good. Usually the market moves within a day or two of the trade alert. Okay, that's the norm. Okay, because both time and price play an important role, and I got to tell you, time is much more of an important factor than anything else. That's a little hint for you. And with that, I'm going to leave it there tonight, and maybe I'll do a separate video on time, or I'll keep talking about it a little bit to try and educate a little bit on why time is important. Okay, I'm David Frost, MyStrategicForecast.com. Thanks for tuning in, folks, for another episode of Common Sense Market Analysis.